All right, VIP traders, let's get to it. It is Monday, May 5th. This is SPY. We are on the 30-minute time frame, and we have an insane trading range in front of us here. And right now we are in pre-market about 15 minutes before markets open. SPY in pre-market is right here, sitting on top of this up gap with the 35 EMA. So those are definitely the first levels to look for. If that breaks, we do have this up gap. The bottom of this up gap is going to be where we have support, 558. We do also have 560 as the bottom of the implied move on the day. 35 EMA here on the weekly time frame, which is a huge level, is right above that. We do have an island gap underneath that. That does tend to draw price in. So even though we do have two earnings gaps right here, we do have an island gap which could override that with that downward facing 50-day moving average. And the implied move on the day, I'm doing this a little bit backwards, 560 to 573, 558 to 575 on Tuesday's contract, 30-day average volatility 549 to 584, and then the average of all of those in each direction is 555 to 577. So I'm definitely going to lean more into these outer numbers, the 555 and 577. When I look at my spreads, we have $2 wide here, so 577, 579 maybe up here, and $2 here, so 555, 553. Of course, you ultimately have to make the decision of which spreads you want to trade. These may be a good choice if we drop. However, this average number has been giving me a lot more wins. This could be a little bit too close today. And I also have been looking at the spread this way, 558, 555. That could be an option I look at today as well. And SPX, same thing over here today. Futures have us down 0.77%, so that would put us right here on top of this up gap at open and right above this 35 EMA on the weekly time frame. That 35 EMA, I'm going to go to that time frame real quick. Right here is a pretty wild resistance once we trade underneath it. We had an amazing rally to get up to this level. Look back here, this is in 2022 when we were trading underneath that 35 EMA on the weekly. That was a resistance level. In all cases, we did get just a little bit above it and then pulled back down even more violently. So 35 EMA, that is in our trading range. We're currently just above it, and that is right here, facing down with that downward facing 50-day moving average. We do have two bull gaps underneath us from earnings, but we also have the rest of this bear gap and a downward facing 50-day moving average. Don't underestimate that. I guarantee you we are going to be seeing those levels. And implied move 56.25 to 57.45, 56.09 to 57.65 on Tuesday's contract, 30-day average volatility 55.10, 58.65, and even though our close could be anywhere within these, the most likely is that we're going to see something between 55.80 and 57.95. So if you're trading spreads, maybe lean out a little further than what the implied move is saying. And again, here I've also been looking at the spread this way, just trading it on the 0 DTE, and that has been giving me a lot of reward. QQQ, implied move here today, 482 to 495, 480 to 497, 30-day average volatility, 471 to 507, and then the average is 477 to 500. And today, maybe I will just be trading this spread. I think that adding that new average has had many benefits, but maybe for the next week, I'm going to be trading this one right here, 480, 477, and that does put us into a support gap there. 497, 500, 50-day moving average is right above us right here. That is a big level. Look at how overbought we are at that level. Wouldn't be surprised to see a pullback, 35 EMA underneath us, two up gaps, downward facing 50-day moving average. This is the key right here. And IWM, we do have an implied move, 197 to 204, 196 to 205 on Tuesday's contract, 194 to 207 is the 30-day average, and here again 205, 206, 196, 195 for IWM. I will be looking there on the 0 DTE. Pre-market takes us right here, right above that downward facing 50-day moving average and 35 EMA. So really big levels, And with volatility up already this morning, we could have a decent amount of premium at these spreads, probably right at open. So I would be looking to not wait, but to get right in. And then we also have DIA. This is a wild looking trading range here. And DIA, 50-day moving average, is slicing right through, facing down. 1 hour is facing down as well, and 35 EMA facing down with this monster bear gap that we did not get into last week like we did with the others. And the implied move on the week is 404 to 422. 30-day average volatility, which normally lines right up with that, takes that out $3, 401 to 425. That could already be a perfect spread written in the numbers. And we do have a little support gap right here underneath us as well. If we do drop, that is at 406. So I'm going to hurry up, get this out. Have fun today, trade safe, make sure you take profits when you're up, and I will see you guys after markets close.